Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 2nd of September, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the second week of September. And initially, spot gold has been recovering against the US dollar and broke out from this trend line and hit the 62 pip retracement from this bottom here, and then pause. And on Thursday, the US PC price index data came out, and that caused the dip, followed by Friday's non-farm payroll report, where initially it attempted to break through higher above the 1950, but then fell all the way back to close as a doji. So a bit of a mixed picture with not just the non-farm payroll data, but the impact on the price action for spot gold. And you will see almost an inverse relationship with the dollar Japanese yen, where it did attempt to dip lower initially, and Friday it did try to test the lows again of the previous week and managed to recover and found a good bounce support back up above the 146. So let's see what the main drivers were for last week, with a lot of US data for inflation and PMI as well. And then also take a look ahead for next week, this coming week, with not too much US data and only one central bank rate decision with the RBA. In the next couple of weeks, there will be more with the ECB, and then the third week will be the Federal Reserve and the Bank of England's turn. All right, so let's take a quick review. Let's review what the main fundamental drivers were for last week, with focus on inflation, and then finally on the NFP report from US on Friday. I didn't add the consumer confidence on Tuesday, but looks like it did have some impact on the price action for the US dollar, with a surprising lower figure than expected. And this triggered the US dollar lower. And against the Australian CPI, which also dipped lower than expected. So this gave some hope that perhaps the RBA will also hold their interest rate for next week, which they already surprisingly did the last meeting in 1st August. And then on top of that, the US preliminary GDP also came out lower than expected. So this kept more bearish pressure on the US dollar. And the Eurozone, they did have a higher than expected CPI. And this will have some impact on the ECB's decision in a couple more weeks for their rate decision. And then eventually on the Thursday, this was the key one for the inflation numbers. PC price index maintained at 0.2%, and this still gave some concern. And this gave some recovery to the US dollar. Although the initial part of the week, they showed weaker numbers for the US economy. And it could sway their decision also in a couple more weeks with the Fed, where they could decide to hold any rate hike for now. They could pause, but we'll see. And Then on the Friday, the non-farm payroll came out slightly higher than expected, but did not cross the 200,000 mark. The other elements were like the hourly earnings came in lower than expected, which did help the report that that the jobs outlook could be slowing down. And as well, the unemployment rate climbed up unexpectedly to 3.8%. So that also helped to give a more softening impact on the jobs side, which may also help to sway the Fed's decision. And then surprisingly strong manufacturing PMI figure came out an hour and a half later. And this helped to boost the US dollar further to recover after initial dip the first half of the week. And we'll see that in the charts later on as well. But looking ahead for next week, we've got the RBA coming up with their rate decision first for this month. And they're expected to maintain at the 4.1% forecast, and which they held as well in August. This was August forecast, August decision. So they could also continue to hold. The expectation is just to hold and pause. And this lower CPI figure could also help, and also softening in their jobs report as well. And following that, the Australian GDP forecasted to grow slightly higher than expected quarter over quarter. And then on the US side, the only key news for the US economy this week is just the services PMI. And is forecasted to stay around the same level, around 52.5. So we'll see if that is going to maintain. So let's see if this week the charts will show whether the price action, there will be a continuation recovery for the US dollar after initial dip, but then finding some support. So let's move back to the analysis. Let's begin with spot gold. And the key breakout was on Wednesday, the Tuesday, with the unexpected, lower than expected consumer confidence figure that gave an excuse for US dollar, for spot gold and other majors to break out higher and dollar to retreat lower. It did break through this trend line and the resistance zone at the 50-fib retracement, and hit the 62-fib extension retracement. And on Friday, finally closed, still closed above the 50-fib, so close to the 1940 level, close as a doji, but not sure whether it's able to find support at this level. Otherwise, if it does dip down lower, it could test the 38-fib retracement before attempting to perhaps retest the 1950. So it's at a critical area because it's at the 62-fib retracement, and there could be a bearish continuation move lower, or perhaps a consolidation first before finding support to break out higher. So it's in a key consolidation zone now. Let's take a look on the weekly time frame. And still close bullish, close above the 50 pip, and there could be some continuation move higher, but let's see how far it can go. But for now, it doesn't seem that there's going to be a bearish continuation move yet. We'll see after this coming week. So this pullback is not deep enough. So we have to see how far that retracement is going to go, or whether it's just going to continue up higher. So this is still a critical resistance zone at 1975. And now the key resistance is up to the 1950, along with the 62 pip retracement. This zone here is a major support now, and perhaps an interim one at the 38 pip retracement. Okay. Let's extend this trend line a bit further. So this 50 pip now is a critical level. Could be interim support. And so we'll see whether it's able to provide any kind of support for spot gold if it's going to continue higher. All right, so let's compare this with the US dollar index, the DXY. This is the DXY, and indeed it is almost an inverted mirror image of the euro. After dipping lower, finding support, the support zone at the daily 200, and recovering the last 2 days of the week, attempting to climb back up to test the 104 round figure. So let's move this out of the way. This will be interim resistance now. And still the key resistance zone up at the previous swing high of this previous drop. And now it's attempting to recover all the losses over the last 2 months in June and July, 1.5 months, and then recovery since then. Key support is confirmed at this daily 200 and the 50% fib here. There could be interim support here, but we'll leave it for now. So yeah, we'll leave the fibs as it is for now, and take a look at the weekly time frame, and that's the bounce, a retest of the 62 fib, and bounce back up, trying to push above the 104. It's attempting to retest this swing high, and if it does break out higher, then that's a significant breakout, trying to get to the 105. which is a critical resistance at since the start of the year. Okay. Yeah, we'll leave the fib as it is for now until there's a clear breakout of sorts. Now, the danger is also that once it comes up to test the resistance, there could be a double top, and it could also falter and reverse lower with the Fed decision. If they do hold and do not increase rate and pause, then there could be some hope for the markets where they could celebrate in the short term. So that's a potential danger with this resistance zone up here. With critical news coming up, not this coming week, but the following week. Okay. So let's move back to the other pairs. Let's take a look at the dollar against Japanese yen. Initially attempted to test this significant resistance zone, and that's above the 147, right into the middle of that resistance zone, critical resistance zone, and was quickly rejected and fell back. And that was on Tuesday with the poor consumer confidence figure. Attempted to consolidate the next day, but then fell further with the PCE data, which dragged it down a bit more with a possible market expectation that the Fed could pause in their next meeting in the third week of September. But then on Friday, with the mixed news on the non-farm payroll report, it did dip lower to test the previous week's swing low, found support and recovered back up with a strong support and climbed back above the 146 round figure, attempting to test the 200 again, 200 fib extension. So it's trying to stay afloat and finding some support. Looking at the weekly time frame, it closed as a doji, almost as a doji. So it's at a critical area with the resistance zone above it. So it's getting too close into Bank of Japan's intervention area. They could intervene anytime if it's the Japanese yen gets too weak. So this is the zone is going to be the resistance zone there. Interim support at the 145 and the 162 fib extension. Major support at the 138 fib extension with the 144. So, but yeah, this momentum is starting to slow down. We'll see how far it can attempt to climb up higher, but it's struggling at the moment. And it does come up to test the 147 again. That's could be a danger sign if it's a rejection, strong rejection here. Then it could tumble quite a deeper retracement here. With the daily 55 EMA coming up. So lack of US news next week. So we'll see what kind of price action we can get for US dollar. For now, we'll leave the fib as it is. We don't need to change it now for the moment. Even we move this one up here, it's still sitting at the 138. Yeah, for now it's leave it there. So 200 fib is a pretty stretch extension here. So it could be just consolidation, and until the week after, then we'll see whether there's a more clear breakout or breakdown for the US dollar. Okay, so do check out my other videos on the other majors, and have a safe week and a good trading week. And cheers for now.